right, let's go ahead and get started, guys. Today is Thursday, July 9th. We are a week away from the tax filing deadline, which is next Wednesday, July 15th. If you guys haven't gotten your extensions done, please make sure you contact your CPA. If you're my client and your tax return hasn't been done, your extension has definitely been done. So you don't have to worry if you're with me, but please make sure that you are at least extended if you haven't yet filed anything. So I always have to make sure to do that warning. The last several weeks have been absolutely crazy balancing the PPP stuff and the tax season stuff. So please bear with us. There may be some mixed terminology thrown around here and there. Today, I am joined by our wonderful attorney, Jackie Durham, and we are planning on covering a couple of updates first and then going through the long form of the PPP loan forgiveness application. On Tuesday and last week, we covered the easy form. Today, we're going to go into still fairly simplified example, but on the long form. And if you guys have questions, please put them in the Q&A. We may not get to them until after we're through our form and the example that we want to get through, and then we will take questions after that. So don't put them in the chat box, put them in Q&A. It's easier for us to see them that way. And I will hand it over to Jackie to get us started with some of the updates that have happened from Tuesday to Thursday. Go ahead, Jackie. Thank you.
Right. So the Senate has been busy. I mentioned on Tuesday that they are considering some legislation that will allow certain borrowers to take a second bite at the apple if they fall under a certain threshold in terms of the number of their employees. So that's still being mulled over. But something that was proposed to the Senate is a bill that would automatically allow for forgiveness for borrowers that have loans that fall under $150,000. And this bill is called the Paycheck Protection Small Business Forgiveness Act. So this has not passed. This is still just a bill that's being put in place because it will help alleviate the administrative burden that this ridiculous forgiveness application would impose upon a large number of these small borrowers. So the Senate, certain senators were talking about and estimating that for every forgiveness application, a borrower could expect to spend about $2,000 just to get the professional assistance that would be necessary to prepare this form and to make the certifications in a confident manner, because this form can be so confusing. And then they also estimated that it would cost each lender per application about $500 just to, have the manpower to process all these applications. So this bill is really being put in place to ease that administrative burden and save the borrowers and the lenders what they estimate to be billions of dollars that would result if they had to process every single forgiveness application. So we don't know exactly what the terms are going to look like. There's going to be probably a one-page attestation that the borrower will have to sign, basically saying that they swear to God that they're entitled to the forgiveness that they're seeking. I don't think that this means that you get a pass or that SBA cannot come back and look under the hood later within that 6-year period. So we have to kind of wait and see exactly what passes and what those terms will look like. But at least it could save a lot of borrowers the time and expense and having to hire a professional to prepare these forgiveness forms. So we're going to go through the form today for fun, but for some of you, this may be a useless exercise. So we'll keep you posted on that, of course, the second we get more information, and the second it actually passes, you guys will get a blast from us and we'll bring you more information as we receive it. The other thing I wanted to touch on is we've been getting a lot of questions from our clients who have received EIDL loans or who are applying for EIDL loans. So we kind of want to circle back and just refresh everyone's memory on what we discussed a few weeks ago, which is who is actually entitled to this loan, who qualifies for this loan, and also what expenses can be used with the loan proceeds. So it's a little different from PPP, so I kind of want to just recap that. So first and foremost, in order to qualify for the EIDL loan, there has to be substantial economic injury to your business. So this goes beyond what is required for a PPP loan, which only requires that there is uncertainty regarding the business for the future based upon current business activity. Substantial economic injury basically means that your business has been hit so hard by COVID that without the EIDL loan, you could not otherwise support normal obligations as they accrue, such as payroll, accounts payable, fixed obligations such as mortgage and rent, things like that. If you can otherwise meet those obligations without the EIDL loan, you don't qualify. There's not substantial economic injury, and I would not take that loan. The loan is very easy to get. So you literally fill out a couple of forms online and click a few buttons, and it's very easy to get, but you need to keep in mind that you're making certifications under oath as to your eligibility for the loan. So please be careful and take a close look at that. The other thing I want to mention is the use of the funds is limited. So you can only use the funds for payroll costs, fixed debts such as mortgage and rent, accounts payable, and then other obligations, assuming that they have occurred in the normal course of business. So you can't go rack up a bunch of credit card debt and then use the EIDL loan to pay that off if it's not a normal obligation that you were paying in your normal course of business prior to receiving the EIDL loan. SBA has also shared examples of exactly what is not permitted to be used with the EIDL funds, and that includes dividends and distributions to owners. So if you're an owner, your normal employment compensation can be covered with a portion of the EIDL loan, but your distributions and dividends cannot be covered by that EIDL loan. Also, I was talking about obligations that pre-existed the EIDL loan and those being permitted for purposes of using the loan funds to satisfy those obligations. That does not include shareholder loans. So if you are a corporation and you as a shareholder have loaned a certain amount to your corporation, even if your corporation was paying you every month prior to the EIDL loan a certain amount in repayment of that shareholder loan, that is not something that the loan funds may be used for. So you will have to sort of abate those payments during the term that you're using the EIDL funds. Also, any kind of expansion or improvement of your business location or the acquisition of additional capital assets, the loan funds cannot be used for these purposes. Also, repairs of your business location may not be, the funds may not be utilized for those purposes. So SBA has given you, a handful of these examples of what the funds can be used for and cannot be used for. These are not exclusive lists that I've just shared with you, but it kind of gives you an idea of what the funds can truly be used for. And it's all in that same vein of they really want you to only utilize this loan if you absolutely need it in order to meet your normal obligations. So if you guys have any questions about that based on your particular circumstances, we're happy to chat with you about those outside of the webinar, or if you want to submit your questions now, we'll get to them at the end of the webinar. Marina, what do you think?
Yeah, I agree with everything. What I have seen with my clients sending me emails and asking me when they did get approved for EIDL loans is oftentimes, can I pay my credit card debt and can I pay some of the other obligations? And I'm always very careful in giving advice on that, because if it is a business credit card debt that you have to incur with the ongoing business expenses, and now you want to make sure to stop the bleeding on those interest rate charges on the business credit card debt, that you can utilize EIDL loan, but it's got to be your business credit card that was anyway used to help you through the tough times, but most certainly not your personal credit card or none of the improvements or expansion or addition to the building or anything like that. So
yeah, and I would also say that the credit card bills, you have to be careful there, because what they don't want you to do is you can't use the business credit card for unauthorized purposes.
Yep.
As far as the loan goes. So you can't go and use your credit card to buy capital assets and then pay the credit card the next month with your EIDL funds, because that's indirectly using the funds for the wrong purposes. Something I would also mention is that they say that you can't use the EIDL funds to refinance any long-term debt, and you also can't prepay obligations. So you can't use the EIDL funds to go in and pay your rent
ahead of time.
or pay down, you know, your mortgage or anything like that. So just, it really needs to be expenses that you would otherwise normally incur in the normal course of business. That's what I would say.
Absolutely. So there's, you know, it seems like it's easier than it really is once you start really digging into requirements. A lot of people were applying for PPP and EIDL early on, just, you know, everybody was concerned, everybody was stressed out. As more guidance and more rules are becoming clear, and you know, there's more articles published, you really do need to think about whether this would apply to you and whether this is a good idea. And I'm grateful that a lot of my clients have emailed me and asked me my opinion, and a lot of them did. You know, it's funny because a lot of clients who were nervous and concerned about it actually did have a good reason to have the loan. So I'm just worried about those people that say, oh yeah, this is fine, I'm fine taking it, and, you know, don't seek any sort of opinion or counsel, if you will. And I don't want anybody getting in trouble with SBA 6 years from now, because we certainly won't remember what happened in 2020 at that time.
And they certainly give you plenty of warnings about all the penalties and liability that can follow you if you make a false certification. You know, I was also thinking, they talk about the business expenses and the fact that your normal business expenses can't be met, and that's what will qualify you for this loan. And it makes me think about some of our, you know, realtor clients and friends, or independent contractors or sole proprietors who don't really have business expenses necessarily. They have the compensation that they pay to themselves, but otherwise they don't necessarily always have rent or a business mortgage or anything like that. So keep in mind that if your expenses and income may be down, but that's not enough to qualify you for this loan. So just taking a hit from COVID and your contracts are down, or your business activity is down, that's not enough. So if you don't have large business expenses, and really all that's down and all that's you're suffering from is a decrease in your net personal income, that may not be enough for purposes of this loan. So, and even if you are able to get the loan, it might be limited to what you would otherwise normally pay yourself in W-2 compensation if you're an S corp. So just saying that out loud as well.
That's a good point. And where I see this loan being very useful to is anybody with rental properties, where, you know, the income was lost. Let's say people are not traveling, people are not renting, but the expenses on the rentals do continue to be incurred. That is, I think, a very nice use of the EIDL loan if you're in that position and you really don't have much of an argument. But then again, if you have that extra money, you'd be tempted to go and replace the roof on this rental while there's no tenants, and that you cannot do with EIDL funds. So where I also see this being looked at a little bit is, again, on the tax return. You know, you may say, well, my EIDL loan was only 100,000 and what's a big deal, and nobody's really going to look at it. We're not even sure what threshold they're going to use for going back and maybe, you know, asking for backup or seeing how you use the funds. But if you are a business and you are filing a tax return next year in 2020, you've got a balance sheet on your S corp or partnership tax return, and on the balance sheet you're going to say that you now have this loan as of the end of 19 or at the end of 20 when you're reporting your 2020 return. So you know, they are already saying they're going to use IRS as an agency to possibly look at what's been happening in the business. And I wouldn't be surprised if that's going to be part of their algorithm to pull certain businesses for an audit to say, hey, these are the businesses that have the SBA loan on their balance sheet, and you know, maybe a sample or random you know, pull from IRS and going into the SBA and use that for testing. So I guess I wouldn't go past anything, because they were very specific about you know, even if you're a small loan, and that's for both PPP or EIDL, there's no guarantee that you're not going to get looked at or questioned of how you're using the funds, and to make sure you're doing everything properly. So I feel like tax returns are going to be an easy way for the governmental agencies to find out who you are and maybe sample from there. So not to scare anybody, but definitely we need to be super, super, super careful of what we're doing with these funds this year. And also when we're going to be preparing tax returns next year, I think we're going to have to spend a little bit of extra time to make sure our expenses are properly recorded and the loan is properly reflected. So be prepared for that next year as well. We're still dealing with this tax season, but please be prepared for the next tax season.
The fun will never stop.
Nope. SBA for life.
Oh my gosh.
So let's get started with this. I think what I'll do is maybe run down just the basic fact pattern that we had come up with. This is still a fairly simplistic type of a client, but I think you get to see a couple of different schedules in this long form that we didn't have in the easy form. So here we have a small business, and it has an owner employee, and it has two other employees. The owner employee's salary was $120,000. The two employees were at $50,000 each. What happened is one of the employees had to be furloughed, and the other employee had the salary cut. He stayed on, but his salary got cut by 30%. This particular business also has rent, and it pays rent at the rate of $2,500 a month, and it's got utilities at the rate of $300 a month. So first we look to see if we can fall into the easy application in this case. And although this particular business was unable to operate at the current, at its normal level as it was before February 15th due to governmental restrictions, and that's the reason why one of the employees got furloughed. So we do meet that safe harbor, which is available for the easy application. The problem with this particular business is that the second employee who stayed on that had a salary cut, that person's salary was cut by more than 25%. So immediately you know that you are out of the easy form and into the long form here. So what we will do now is let's look at the first part of it is very similar to the easy form. It's just asking for your business name, address, EIN number, contact, loan number, and the lender loan number and the loan amount and the date. So the top part is the same. What you see here is the employees at the time of loan application were 3, but at the time of forgiveness there were 2. So who those 2 employees are is our owner employee who stayed on, and our second employee whose salary got cut by more than 25%. That business also early on applied for EIDL and received an advance of $3,000 because at the time it applied, it had 3 employees and the advance was at $1,000 per employee. It did not receive any other EIDL loan that we need to worry about here. The payroll, we have 3 employees, very typical. The payroll is going to be bi-weekly here, and we're going into the 24-week covered period of the loan. The reason why we picked alternative payroll covered period, we talked about that, guys, a little while ago, but essentially it's to make the administrative calculation of the payroll cost easier. So even though the loan was dispersed on April 1st, the immediate next payroll period begins on April 6th, and we're going to use that payroll and then the payroll that ends after the end of the loan period to make sure that we have our 24 weeks inside the covered period for the payroll cost. Okay, we're not checking anything about the $2 million here. So now we go into a familiar schedule that you've seen before on Tuesday. However, in the payroll costs, this is taking us to something called Schedule A. So now let us go into Schedule A and see what we have over there. We're in Schedule A, which further gets us into Schedule A worksheet. So let's go into the worksheet. So essentially what you're doing in the long form is you're starting from the back. You're starting from the worksheet, and this is what I would fill out first. The worksheet says to us, okay, list all of these employees here that were employed during the covered period or that alternative covered period of the loan. So who we are not going to list here is the person that had to get furloughed because the business was forced to be closed due to governmental restriction. So that one employee that was gone is not going to be listed here. The other person who is not listed here is the owner employee. There's going to be a separate section for that. So really the only person that's left to be listed here is our employee who was unfortunate enough to get a salary cut, and he went from 50,000 annual salary to 35,000 annual salary. Also note that there's two tables in this worksheet. So table 1 essentially lists the employees that were employed during that period and received compensation of 100,000 or less. The second table is listing the employees that were employed during the loan period who received more than 100,000. Again, if you remember, guys, the compensation for purposes of loan forgiveness calculation are limited to 100,000 per employee, including the owner, and that's why if you have employees that were over 100,000, you would enter them here, and then the owner is still going to go in a separate box. So we will get to the owner later. So what do we have here? We have John Smith, and his cash compensation was $16,153.85. What is that number? That is his salary of $35,000. Remember, he got cut from 50 to 35. So that is $35,000 annual salary prorated for the duration of the loan that he got paid. So this is 24 weeks of salary for John Smith. In the next box, we have average FTE. So this is where you also put down if, this is where you monitor essentially your count of employees that you had. So he gets a 1 because he was a full-time employee. To refresh your memory a little bit, there's different ways to calculate if you do have part-timers or if people didn't work their full-time. Typically, a full-time employee who is working 40 hours a week is considered 1. Anybody who works less, you have a choice. You can, for simplicity purposes, say that anybody who's less than 40 hours a week gets a half, 0.5, or you can actually calculate the decimal percentage of what their head count is based on the hours they worked. So you would actually prorate the hours over 40 hours and figure out. That would come handy if you are really trying to see how many people you have reduced, if you've brought some extra part-timers. So essentially you're trying to get to the same FTE that you were before, or that you were, during the period of your choice, but you want to make sure that the calculation of the FTE is favorable in your particular position. So this is where, depending on your situation, and if you had part-timers and if you had some seasonal employees and you had to let some go and you brought some new ones, that would make a difference. In our particular example, with us just having 3 full-time employees, it's fairly simple. So this guy gets a 1, so he stayed as a full-time equivalent. And the next box is where the fund calculation comes in. So this is the reduction in the salary that is in excess of 25% wage reduction. So if you remember, you're allowed without penalty to reduce the salaries of your employees by no more than 25%. Since you reduced John's salary here by 30%, what the $1153.85 represents is the 5% reduction in his salary from 50,000 to 35,000, prorated for the loan period.
And where do we calculate that part, Marina?
Oh, well, that part is in the instructions. You keep flipping through that booklet, and you're going to get to page 4 of the instructions, and the instructions tell us exactly how to calculate it. So if you look in step 1, it says enter the average salary of the employee. He was making 35 with the cut. What was his normal salary in the first quarter? It was 50,000 annual salary. So he's now at 70% of his regular salary. So now you know, of course, you need to calculate the reduction. You're going into step 2, and then you're going into step 3, and it's quite interesting. And once you've gone through your calculations in step 3, I think the next page, I think if you scroll down, is actually going to give us that number here. There we go. It is on line E. So essentially, this is taking the excess of 25% reduction. Like I said, in our case, we got him cut by 30%. So this is 5% of the difference essentially in his reduction prorated for the loan period. So this is the amount that's going to reduce the loan forgiveness. So that's really your penalty for getting him cut by more than 25%. So Jackie, if we can scroll back up to our worksheet, and we carry the totals down. If you've got more than one employee, which we kept it down to one to keep it simple. So all of the employees that were employed during the loan period are going to be listed in that table. And you're gonna list them all. You're gonna mark whether they were full-time equivalent. You're gonna only fill out the salary reduction box if they had a reduction in excess of 25%. The cash compensation box in that worksheet is just going to have their actual compensation that was paid. So if they did not get a reduction or got a reduction of no more than 25%, you just put their compensation that was paid, but you have nothing in box 3. All right. So you carry your tallies down to the boxes. Now we've got our table complete. Now we're going back up to the worksheet. And so in the worksheet, what we've got is $16,153.85. That was John's salary for the duration of the loan. We had one full-time equivalent. And line 3 is the line that's basically saying that if you had a reduction over 25% for salaries, please enter that here. Note that it says that if you did not have a reduction, please check this box. There's a box in there and enter 0 on line 3. So this is the case where you're still forced to fill out the long form because of the other things you don't fit into for the easy form, but in your particular case, you may not have had a salary reduction for anybody else, okay? The line 4 and 5 deal with the second table in the worksheet that had to do with employees if they were making over 100,000. And this is where you would basically limit their compensation to 100,000 basis. But essentially line 4 and 5 mirror lines 1 and 2. They just deal with highly compensated employees over 100,000. We didn't have anybody in this case because remember our owner is going to be listed separately in the lines as we have. So moving on, we have some other costs here, and actually this particular business, he continued to pay for the health insurance plan, and he also continued to contribute to the employee's retirement plan. So that was very nice. So these are some of the additional expenses that are allowed to be used for the payroll costs for the loan forgiveness. So we've got contribution to employee health insurance. Now, if this is an S corporation, the contributions for health insurance for the owner are not to be included here. Okay, so the owner health insurance compensation under the S for the S corp owner are not included here. So this is contributions to a group plan by the business for the employees that are employed. Okay, the employee retirement plan. These are the contributions that again, the business is making. So these are your, let's say, 401k or a SEP IRA or simple IRA matching contributions that the employer is making. Where you have to also be careful here is the split between the pension contributions for the owner, if you're an S Corp shareholder, and the rest of the employees. So this gets a little bit funky in that, well, first of all, let me also mention that this only really applies to an S Corp, I guess, or a partnership, because if you are a sole proprietorship, there's no health insurance or pension contribution that's allowed expense at all. So Jackie, do you want to talk a little bit about the differences here between the contributions for the owner versus employees?
Yes. So whenever you have, like, first of all, like Marina said, when it comes to an independent contractor, sole proprietor, self-employed individual, including a partner of a partnership, you are not going to be able to receive forgiveness for your retirement contributions or the health insurance plan contributions. However, If you are an S Corp, so if you're an LLC or a corporation taxed as an S Corp, the contributions from the company to the owners of the S Corp for retirement are forgivable, but this is limited to the prorated portion of such retirement contributions that were made for that shareholder in 2019. And the same thing goes for companies taxed as C corporations. C corporation owners actually get forgiveness for their the company contributions to the health insurance plans as well as the retirement plans. But again, for the owner contributions, these are capped at the prorated 2019 amounts that were contributed for those shareholders or members of an LLC. So if in 2019 you didn't make any contributions to retirement for the owners, if you're an S Corp or a C Corp, then you will not be able to receive any forgiveness for your retirement contributions during the covered period, unfortunately. So there's, unfortunately, the self-employed and independent contractors and partnerships, you get nothing. C corporations, you get both, but you're capped at 2019 amounts that were remitted on behalf of owners. And then for S corporations, you are capped at 2019 amounts that were remitted for retirement contributions. So, but if for your employees, it's whatever you pay for them over the covered period and prorated. And I think that also includes pensions, Marina. So I think based on the instructions, this isn't necessarily clearly outlined in the regulations or in the statutes, but under the instructions, they make it seem like for pension contributions for your employees, you're going to just prorate whatever you would normally contribute to that pension at whatever point in the year over that 24-week or 8-week period.
Yeah, absolutely. And we were just listening to another webinar, another practitioner who has been, head deep into this, and they've been reading and writing about this as well. And they also mentioned that there's really no clear guidance on exactly what pension contributions mean and what time period it includes, but just based on the instructions to the application, for the owner, it would only include 19 level prorated for 2.5 months max. So we took that into account here. Line 8 also, we kind of take it for granted, but you can include the state and local taxes on the employee compensation. However, no portion of the Social Security or Medicare tax is allowed to be on here. So that's important. So no payroll tax, as we call it, payroll tax, which is really the Social Security and Medicare, are to be included here, but I think it's state unemployment and some other local taxes that you can add to the compensation. So now we get to the owner. So the owner compensation, remember this owner was taking salary at the level of 120,000. He, like all of the other ones, are limited to 100,000 to be used for calculation. And this is where we get into the fun owner calculation, where we're into the 24-week loan period, but we can only use the max of 2019 compensation or 100,000 prorated for 2.5 months. So if we take 100,000, which this owner is limited to, and prorate that for 24 weeks out of the 52 weeks, the number that we can use for the owner's salary forgivable portion is 20,833. If we are in the 8-week covered period, the owner's max would be the 100,000 prorated for the 8 weeks, which gives us a number of 15,000. Not round, but it's somewhere around there, which is why, again, we have really been saying that there's, if you're not planning on kind of doing anything else inside your 24-week loan period, cutting more people or letting people go or not complying with requirements, to go into the 24-week loan period so that you can get the maximum amount forgiven. So in our particular case, it gives us the ability to use 20,833 for the owner's compensation. Okay, so now we're going into the tallying up all our payroll costs. So we're finally at the end of section 1. We've gotten through all our payroll costs. So We've got our John Smith's salary. We've got our contribution for the health insurance. We've got our contribution for pension plan. We've got some state local tax, and we have our owner. So our total payroll ended up being 40,587. Okay. So now I think we can go back to carrying that number to the first page to see where that takes us. So we've only completed line 1. We've only just begun. This particular business didn't have a mortgage, but as we said, they did have rent. The rent rate was $2,500 a month. Let's assume they did well and paid it over the course of the 24-week loan period. The amount is $16,333. The utility payments, which were at the rate of $300 a month for a 24-week period, were $1,950. This is now where you are carrying over that reduction. Remember that we calculated in the worksheet of Schedule A, and we carried it to line 3 of Schedule A. And this is where now we have to bring it up. So now we are into the section that's called adjustments. This is where you really calculate your penalty for either reducing your number of people or reducing the wages. So first, we did have the wage reduction, and remember, this is the reduction of more than 25% for John Smith. That's the 1153 number. So now we add our payroll across, we add payroll, rent, utility, and we minus the adjustment for the salary reduction, and now we're getting to the number that's 57,716. Okay. Next is line 7. Now, line 7 is where we can potentially get penalized for cutting the number of employees. Remember, we did have to cut one guy because we were forced to close due to governmental restrictions. So let's see if we get penalized there. Now, this is taking us to Schedule A, line 13. So if we go into Schedule A, and we get through our payroll, we get to a section that's called full-time equivalency FTE reduction calculation. Now, this is where you guys really have to read all of those lines, because this is what's going to take you through the safe harbor and see if you meet any of the safe harbors. And if you don't, this is still taking you to the calculation to make sure you whether you had a reduction or not, and whether you're going to get penalized. So let's go through that. So it says, if you satisfy any of the following 3 criteria, please check the box and enter 1 on line 13. And 1 just means you don't have a reduction because your quotient is 1, meaning you don't have to prorate the loan forgiveness, okay? It says if you do not enter 1 on line 13, otherwise you complete lines 11 and 12 and then calculate what your line 13 is. So let's look at our 3 criteria. And remember, you have to satisfy any. So the first one is you did not have reduction in employees at all from January 1st to the end of the covered period. This is kind of the basic time frame that they start with. That is not in really in anywhere. This is not the time frame we had looked at before when the rules came out. But I think for simplicity of the applications, they came out and said, look, if you from the beginning of the year to the end of the loan period didn't cut anybody, don't even worry about looking at any of the other safe harbors. This is for the small business that really continue to operate as much as possible the way they were from the beginning of the year. So essentially, if you didn't have any reduction, mark here. We did, so we had to let 1 employee go, so we're going to continue reading. This is where the safe harbor comes in on being able to operate at the same level of business as you were before February 15th. And the reason it would be for the governmental restrictions. So if you were forced to close, again, medical offices, restaurants, hospitality businesses, if you had an order to close and you had to close and you weren't able to carry on the business as normal, then this is what you would be. So our business falls under this, and that's why we check here. If we check here, we met the safe harbor, we're able to put 1 on line 13 and carry that over to the front page, but I do want to cover the the last safe harbor, and also highlight a little bit of line 11 and 12 in case that does apply to you. So if you, if that safe harbor did not apply in your particular case, what you're looking at is your third potential safe harbor, and it says if you satisfy the reduction safe harbor 2, that takes you to a worksheet. Essentially, and I'm not going to go through that worksheet with you guys today, but essentially what this is the restoration of the number of any employees that you reduced in a specific time frame. Okay, so there was a specific time frame given to us, and if you had reduced the employees during that time frame and you restored these employees by December 31st, you do fall into the safe harbor. And then you click 1. If you didn't, so let's say you had to let somebody go and you know you're not going to restore them, or you know it's been the end of the year and you really haven't, you don't check here. Now you actually have to work through the line 11 and 12 calculation. So now this is where you compare the actual full-time equivalents during the chosen reference period and the actual full-time equivalents that worked during the loan period. The chosen reference period also has different choices. And again, I don't really want to go into the detail on that today, but if you don't meet the safe harbor requirement, that doesn't necessarily mean that after you're done through this calculation, you're going to get a reduction. Because depending on what your chosen reference period is, and those are specific timeframes in 2019 year that you can choose, your full-time equivalents during the loan period may actually be the same as during that reference period. And you may still end up with 1 and no reduction. So this is really a very complex section. If you didn't have any reductions, and if you've restored employees, or you chose any particular reference periods to use from 2019 year, this is definitely where you're going to need help from a CPA. The payroll company will be really good by pulling some of these records, but you'll really have to sit down here and take a look at your changes. So again, I don't want to really dig into these, but know that this is available and you really do need to work through all of these lines. So in our particular case, we did fall into the safe harbor, so we were able to put 1. So now we can carry that 1 back to front page. That gets us to line 7. And that essentially says that, okay, now we've got our calculation of the salaries, rent, utilities reduced by the wage reduction in excess of 25%. And our quotient is 1, which means that we take the 57,716, we multiply it by 1. Now, if you did have a reduction where you didn't end up with 1, you would actually take that, multiply it. So you will have a modified forgiveness amount, which would be lower. So in our case, it's 1. So our total now is still 57,716. We got 42,708. Now that 42,708, assuming it was calculated properly, was based on the original salaries we applied with. So our owner with a salary of 120, 100,000 of the owner's salary was used. The 2 employees at 50 grand. If you take that total, you prorate that for 2.5 months. That is the amount of the loan that this business received. So since we went into the 24-week period, you can see that we actually spend more than the loan that was given. So this is absolutely fantastic, but we're not done yet. We still need to make sure that we have spent proportionately the right amount on payroll versus non-payroll costs. And that is what line 10 is about. So this is our testing line. We take the payroll, and that's on line 1, and we divide that by 0.6. And what that means is how much then can we spend as 40% on other non-payroll costs. In our particular case, because we had so much in payroll, we actually technically could have spent a lot more on other non-payroll costs. So if our rent or mortgage interest or utilities were bigger, we would still be okay. We could spend under that proportions up to $67,000. So we passed the testing line, and in the forgiveness amount, we then pick the smaller, so we cannot get more forgiven, of course, than the loan that we got. So we can get 42,708. And we're almost done because we still don't have a reduction for the EIDL grant that we received of $3,000. So essentially, you can take your entire forgiveness, but since you received the $3,000, that is going to get reduced. Notice that is not on the line of the application, but you did have to put that on the top section. So I imagine that when this gets submitted, that will be adjusted on the SBA and the bank side. And essentially, this particular business is going to get $39,708 forgiven. So yes, that is kind of a long form. Some sections may be easier for you, some sections may be more difficult. I guess it depends on where you really had an issue, whether it was reduction in salaries you have to calculate or reduction in the FTEs that you have to calculate. But either one of the sections can get challenging, and never mind if you had both sections to complete. So this is why the easy application is so good if you're able to fit into those safe harbors. And we covered that on Tuesday. So if you guys want to watch that recording, we covered exactly what are the potential situations that you can fit into to be able to use the easy form. The second page just gets us into the certifications. I don't know, Jackie, if you want to quickly run through them one more time. I know we did on Tuesday, and I believe they're about the same in the long form, if I'm not mistaken. There may be some extra ones because of the reduction, but if you maybe want to run through those real quick.
Yeah. Well, these are basically the same as the ones that are provided in the easy form. Everybody should really read through these carefully regardless, because they do have a lot of information on this one page. So you need to make sure that the costs that you're including on the form were used for eligible, reasons, permitted payroll and permitted non-payroll costs, and that those are accurate. And obviously the documentation that you submit with the form needs to support what is actually being completed in the form. It needs to match up. You have to basically acknowledge that if you use the loan funds for unauthorized purposes, that it carries civil or criminal penalties and charges. So just make sure you're using the funds for the appropriate permitted purposes, which we've gone over in the past. This also goes into the penalties and fines that you can face. Tax documents that were submitted with your loan application need to be substantially similar to what you will actually be filing for 2019. So just make sure that those forms match up to a certain extent. I mean, they don't have to be identical, I would say, but they need to be substantially similar. Also, SBA, again, can come back and request information that was used to complete this form. So there's certain documentation in the instructions that they say you need to submit with the application, and certain documentation that you just need to prepare and have in your file in case they want to come back and ask you questions later. So we talked about this on Tuesday in a little more detail, but just make sure you keep those records, because you will not be able to recreate these records on a later date if SBA comes back to you 3 or 5 years later. And so this also talks about the different safe harbors that you may have elected under the application. I also want to mention with this safe harbor that Marina touched on a second ago, Safe Harbor 2, which is the safe harbor that talks about if you let someone go but then bring them back on before December 31st, keep in mind that reduction had to have occurred between February 15th and April 26th. That's what's provided in the statute. I think it's weird. It's a weird time frame. It's very confusing. A lot of people in their minds have in their minds that, oh, if I let someone go but I bring them back before December 31st, I'm good. Not necessarily, because you have to make sure that the dismissal of that employee took place within that particular time frame. And also, before we take some questions, I wanted to mention, just for clarity purposes, because I know that this part is a little confusing and I even get tripped up when I'm explaining it. The limitation on the retirement contributions and health insurance contributions for C Corp and S Corp shareholders, keep in mind that's going to be limited to 2019, prorated for the 8-week period if you use the 8-week period as your covered period, or prorated for 2.5 months of 2019 contributions if you use the 24-week covered period. So earlier, I just generally said prorated over the covered period, and that's not exactly accurate, because if you have a 24-week period, as an owner, you're going to be capped at 2.5 months worth of your 2019 retirement contributions for S Corp and C Corp owners, and 2.5 months of 2019 health insurance contributions for our C Corp owners. So just wanted to circle back on that one.
Yeah, it's not an easy process at all, guys. And within every line, there's section and subsection and interpretation. So we really, really do need to be careful and understand. We keep reading, and there's more guidance that's still being issued, even things that other practitioners have read and interpreted, and we're in tune into that as well, and listening to some of the stuff that the other people are thinking about. And a lot of it is going to be judgment call on everybody's part, so we're just going to have to do the best that we can. Let's take a couple of questions, really good questions. Renee's asking, do we have a list of the allowed use of funds under the EIDL loan? I believe we did, and I think we have that published on our website. If not, I think we do have a schedule, Jackie, if I'm not mistaken, on kind of a basic list of the allowed use of funds under EIDL.
Yeah, there was a PowerPoint that SBA offered. And what I can do is I can try to get my hands on a PowerPoint to share so that people can see the list that they provided. Of course, they said this isn't an exclusive list, so there may be other items that aren't included on the list, which isn't very helpful. But I'm happy to share that. Now, the little chart that I prepared was specific to PPP, so I can share that as well. We probably really should post an updated version anyways, because there's been changes since we last shared that. But I don't actually have one for EIDL, and it's because EIDL, there hasn't been a lot of guidance on EIDL and what's permitted versus not permitted. It's been very vague. So I think what we should do is maybe just share this PowerPoint that SBA shared, because I think that's as good as we're going to get in terms of the specifics surrounding EIDL. That is great, and we'll post that on our website. So that's excellent. We can get that done. Next question, realtor with a home office. Home office, as we mentioned several times, is not an allowed use of funds, of PPP funds. You can deduct home office on your tax return, but you cannot use the prorated portion of whether it's rent or mortgage interest and utilities from your home office as an allowed use of funds. The mortgage or the rent or utilities actually have to be specifically business related and pursuant to an agreement that was in place before February 15th. So that's a no for the realtor with a home office. Another question on the bank account. There's still confusion about the bank accounts, and I think the confusion was created because at the beginning everybody was told open a separate bank account, put the loan proceeds in there, and then you can track the use of funds. And if you have done that, it's okay, but as time went on later, it became clear that that may just be an unnecessary step, because if you had payroll coming out of your regular account, you really had to work hard to move the money from the PPP account to a regular account, or switch the payroll to come out of this account. Things were happening and going all over the place. It's really not necessary to have a separate bank account for PPP loan. You just really have to track on a spreadsheet or any other records, QuickBooks, if you have the expenses during the loan period, because that's really what you're going to use as backup when you submit the forgiveness application. EIDL loan, I believe it's the same thing. I think a lot of banks do encourage you to open a separate account, and if that's what it takes to get the loan from this particular bank, I would say fine, but it's really tracking and documenting of the expenses here that's key, more so than the actual account. Another question is there a time limit for using the EIDL loan funds? Do they have to be used in 2020, or could they extend into 2021? I don't think that there's a time frame, Jackie. I don't think so, but if you qualify for this loan, it means that you cannot continue to operate essentially without the loan, in the absence of the loan. So in reality, unless you get the loan towards the end of 2020, I don't see how you won't blow through a good portion of that loan. I guess it's going to depend on the size of your loan. I'm not aware of any limitation in terms of when it has to be spent though.
Mm-hmm.
So.
Yep, I agree. What is the ramification of an employee quit during the 24-week period? Jackie, do you want to talk a little bit about the quitting and bringing people or rehiring, and what do we need to do here?
Yeah, and I can even try to jump to that part of the application. So that's one of the exemptions. Again, they talk about exemptions and safe harbors. They all operate in the same way. They're all exemptions. So this is one of the exemptions that came in under one of the prior regulations. If you have someone who is dismissed for cause or quits, that is not going to be held against you. You still get to include that person in this box as a full-time employee or part-time employee, whatever they may have been, in this PPP Schedule A worksheet. And it goes down to, let me see. Nope, that's not it. I'm trying to find the part in the instructions that talk about this. So, okay. Right here on page 5 of the instructions, you'll see that it's directing you to still include an employee who quit or who was fired for cause in that table that I was just showing you a second ago. So you wouldn't include necessarily the cash compensation, because if they weren't paid because they quit, you can probably leave that blank, but you can still include them as a full-time employee so that you don't get dinged in terms of your forgiveness. But this is definitely provided for in the instructions. That's one of the exemptions. So you can definitely still take advantage of that if that happens. Just make sure, again, these exemptions require that you document any kind of dismissal, or if somebody decides to leave for whatever reason, or rejects the restoration of hours, or rejects when you try to offer the position back, just make sure you guys are keeping documentation and records of this. And also, if somebody elects to quit, or if somebody rejects your offer of rehire, make sure that you're notifying the unemployment office, because that's also an additional condition that SBA is imposing on borrowers in order to take advantage of these exemptions and safe harbors.
Mm-hmm. Absolutely, absolutely. That brings us to the top of the hour. There are a few other questions, but guys, please email the questions. So a lot of these we'll be able to answer fairly quickly. I am at marina@koontzparkin.com. You can send the questions. Jackie and I will answer them. Definitely, we're here for you guys. I know this is confusing. We'll keep talking about it. We'll keep bringing you the latest. And this is what we've spent the last several months doing. so definitely a lot of the stuff that we may answer now may change a little bit. It may stay the same. So our goal is just to keep you updated with all of the latest stuff. So thank you so much for joining us today. We will be back next week. We will let you know what topic we will be covering next week. If you do want to hear certain topics, whether it's tax related or real estate related or legal type of questions that you may have that you would like to hear, please also send us an email, and we will put that in rotation as the PPP topic will eventually subside. We'd like to keep bringing you guys updates and useful information. So please send us some ideas on the topics that you want to hear. And I think that's it. We will see you guys next week. Thank you so much.